Over the last load of months, we've been talking about the recession that's coming. I've been saying on my channel that, we will find some sort of bottom. We've been looking at the charts on the likes of the SPY and the NASDAQ, and we could see when the reversal was coming. We've read that up for the last 3 weeks, and in my video last week, I said that is me pulling a lot of the money out now, and we're going to start moving it into safer plays and just build up that cash pile. Before I did this video today, I looked for some inspiration. I went onto my analytics on YouTube, where it breaks down loads of different statistics about yours that watch my channel and where you come from and all this type of thing. And it seems to be a lot of you watch a guy called Stock Mo. Now I know of Stock Mo, and I went on his channel and he did a video yesterday. Now he is talking about something that I have been talking about for well over a month now, probably talking closer to 2 months, about rotating into consumer staples, the likes of Albertsons, Dollar Tree, Dollar General. Now he didn't actually mention any one of those, but he was talking about some of the ones in the space. He's talking about Walgreens, McDonald's, all ones that I have mentioned on my channel for different reasons. They're not the ones that we have picked, but he's now talking about the same things that we've been talking about. And I've noticed a lot of our viewers are starting to move to that space, and they're all saying a recession is coming. Something that I have said way before all these guys, and something that we have been winning on in terms of the stocks way before these guys, and it got me begging the question, are they behind the curve? Do they not know as much as us? Or is it still that these guys prefer to pump these neos? And not saying there's anything wrong with neos, but it's more views to their channel. People want to see about, the next stock is going to 10x. They don't want to hear about, you can get 10% return over the next month on Albertsons. So it's interesting now that that is the space, and it's reaffirmed everything that I've always thought, always said, always shown on the channel, that we're going into a recession and the kind of stocks that we should be aiming for. So today's video is a recap of how we performed, and also to look for the week ahead. What is a crack, everyone? Welcome back to Buy Wholesale. Hope, of course, you're all well. Sorry about that sort of long intro. I just thought I'd share a bit of that with you. Again, it is relevant. I do feel like we've been going into a recession, and now it looks to be some of the big players. And Stock Mo seems to be the #1 person that you all watch on my channel, which was interesting. So yeah, there you go. Share that with you. Did my video last week. Obviously, we said there's a sell-off. I'm out of Tesla. A Bitcoin is going down. So we will look at these, and we're going to kick it off. We're going to look at how the SPY has performed on the week. Not surprising to me that it's been a red week. We've seen the sell symbol come in and it's down. So anyone who watched the previous video last week should be well prepared for that. So just to go back to what I was talking about, this consumer staples, and I did a wee bit of TA last night, and this will be interesting for a lot of people. So if I actually turn on this compare, and this is the XLP chart, and what the XLP is the select sector fund, consumer staples. There's other ETFs of similar sort of nature, but pretty much it's a selection of the consumer staples that are in America, and you can get European ones or whatever. The reason you pick these recession proofs, if you want to call it that, is because, for example, Pepsi and McDonald's, they're staples, they're in everyone's homes, and with recession, no recession or whatever, these things will always be there, and they can easily adjust any inflation issues by just slightly increasing prices, and we've already seen that across the board. That's why we're in the likes of Dollar Tree and Dollar General as well. I look at them and go, when times are tough, people straight away go, I need to get more stuff for my money. We're like, well, I'll go to a pound store, or I'll go to a dollar store. That's why we're in those plays, okay? And I've told my Discord, everyone knows about it. During the great bull run, no surprise, the S&P has outperformed it. And if we zoom in to sort of this week, not surprising, it is swapped. It is flipped over, okay? And if we even strip this way back, and I'm going to do a proper video on this, because I think it's very, very interesting. And if you go to the 07, 08, again, similar pattern, going around, and then look what happened. Bear in mind, the recession came in at the end of 07, probably around December, it was confirmed, but Wall Street and charts and smart money already know that. So you can see here, on the 12th of November, it outperformed, it flipped over and started to outperform the S&P. Always above it, and then the swap happened in sort of July 9, when things really started to get better. But it outperformed it. Yes, it still went down, it still had hard times, but it outperformed it. That is just a bit of TA. That is reassuring to me that we are doing the right thing by picking these staples. Now, we're going to be safe from any drops? No, but it's at least a safer play. And what I like about this is you will get a period when the S&P is going down, you should still get a period where these stocks are going up. And no surprise then, if we go to our watch list, stocks that are on the top of the watch list are Dollar Tree, big Berkshires there, of course, Buffett's always steady on the ship, but Dollar Tree, Albertsons, Pepsi, up. McDonald's, up. Yums, which is the KFCs, your Taco Bells, up. The ones that we picked, Dollar General. This is it. Your Stock Mo's talking about McDonald's and all these ones where I'm going, Nope, I would go for Dollar General, and what are you getting? You're getting the best gains. I'm not saying stock moves wrong, by no means. He's definitely right, and he's more realistic than a lot of the other YouTubers that are still pumping all the crypto and all the crap. These are KOD ACI Minerals, which has decided to start reacting pretty damn good, up only 4.4%. On the 6th, we bought more. Good man, so did I. Yes, let's do it. And then what happened? Took off. 15% up. We're absolutely delighted with that, and we're talking about, you know, 8 billion more in, 25% of my portfolio in KOD ACI Minerals, so it's considerable amount of money. So I'm not going to risk it anymore, although my gut is telling me to do that. All in all, it was a good week. Don't get me wrong. My long holds have all pulled back. Unfortunately, I did my ABML video during the week where I said, get out now, it's going to sell. That's what's happened. So hopefully it protected a few people there. I sold 50% of my position. It has massively pulled back, but I've locked in a load of profits, so I'm happy. I'm waiting for it to fall a bit more, and we'll put it back in. It's all in my video. Have a quick look at the week ahead. So we can see here then the stocks have pulled back massively. Bitcoin's pulled back, and the commodities, the oil, the gold, and we've done well on gold this week actually as well. We've still got our gold hold. So consumer inflation expectations. This will be a big day. I'm really interested in seeing this here to see where it's being marked at. So keep an eye out for that. CPI, inflation data, as I said. And believe it or not, then we're kind of already back into the earnings period again. Wow, like JP Morgan Chase, BlackRock, Bed Bath & Beyond, all these guys are reporting, and the big banks' earnings. This is going to be key. Now, I think this is going to be a good earning period. I actually do, because I think all these companies have started baking in inflation. They've adjusted their prices. I feel like this quarter, maybe they're ahead of themselves. This quarter, well, it'll look great. And I think the real pain will be in the next quarter. That's just my own thoughts on it, and I'm still thinking a recession within 12 to 18 months. So if you think about that, we'll be a bit further down the road. So do I feel that it's time to get out of the markets? Absolutely not. I will be becoming a lot more cash heavy, because you want to be cash heavy in a deflationary environment, and I'm going to talk about that. I promise you I'm going to do a really good video, so please smash subscribe and like to understand why you want to have a bit more cash on your hand for a deflationary environment, and the types of stocks that you will win on during these difficult times. You've got to be prepared. You've got to understand that growth stocks are going to be hurting very hard going forward. As promised, I just want to pull up the crypto. We drew this bear flag. I expect Bitcoin to fall, and what happens? Well, we're down about 10%, 0.6% today. We fell below the 45. I said in my video last week, guys, last Sunday, I said if you've any profits or you're worried, get out of Bitcoin at 45 grand. It is showing it is going to go down. We are now at 42.5. So you have lost money if you decided to ignore the charts. Learn to trade. Get my cheap course down below. It is literally a token of gratitude to buy that course. It is dirt cheap, and the price will be going up very soon, because it is coming into a time where you need to understand charts. It is just the only way to win. The days of buying stocks, holding for a year, making loads of money, it's gone. It is done. You will lose a lot of money if you do not have some slight idea of what you're doing. You can also join a Discord for a one-off fee, lifetime membership. That is changing soon. At the end of this month, we're going to start a monthly subscription. So if you want to get a lifetime join to the Discord, you've got to take advantage of it over the next couple of weeks. So look, that's the video. I don't want to be too fearful. I still expect this week to be grim for the reasons that I talked about in my previous video, which was all to do with the fact that this is a tax season sell-off till the 18th. So there's another week of tax selling, rebalancing. Maybe in the back of that, then I would suspect we will get a bit of a rally. I do anticipate earnings season to be reasonably good across the board, so there will be things that'll push it up. So it's not doom and gloom. We're still going to be trading good stocks, good companies. You know, there'll be good rebounds on a lot of your growth stocks. There's still time to get out of the woods on a lot of these positions. There will be a time to buy the dips and ride these things back up. Don't be too worried, but you've got to start thinking about that longer play down the road. You've got to start thinking about how can I position myself to capitalize, and what way should I be playing it, and I will guide you through all of that. And if you're interested in these types of videos, I would maybe consider watching this one, what we've talked about in this video in more detail. That's why I'm not going into any more in this video today. It is all in this video, so I would check that out. I would smash the like and subscribe button, stay up to date with all the future videos that I will be doing. Check out the link down below for the course on how to learn how to trade and protect yourself, and I will catch you in the next video. Peace.